Hey there. In today's podcast, we're going to take a look at Amazon. Amazon's going to report earnings in 2 hours from when I'm doing this recording. It's an important enough topic for some of us at least. If you're in the business of investing or trading, it probably is something you're a little bit more excited about. Uh, Before I get started, I'm not an investment advisor, nor do I claim to be one. So what I'm sharing here is purely for entertainment and educational purposes. So that's with that disclaimer out of the way. Let's just talk about a few things. So Amazon's reporting earnings, and if you see them in the background there. I don't usually do these. We don't usually do these podcasts when the market's open, for the most part, at least, right? Because we're doing a number of different things. One is running the company, which is a software company, Snowpal, and looking at the market and some of the things that's happening there. Because the next product we're looking to build, or starting to build, I should say, is in the fintech space. So we have an interest, very much so, in the space of finance. And we're going to take that to engineering and build software around it. So definitely, if you don't know us or know our products, check us out, and see if you can build software quickly using AI and our APIs. And when you put those together, you can go to market in real quick time. Now let's get to this Amazon. They're what are they at right now? Seeking Alpha is a little bit behind the real time prices. So let's go here. Yeah, I think it's like 3.91% down, right? That's what it is. So let me go back to Seeking Alpha. Oh, hang on. Oh yeah, I think maybe the page wasn't refreshed earlier. Like I said, it takes the real Seeking Alpha does not show you real time data. It's just a minute or two behind, if not more. Um, at least from what I've seen. So, anyways, they are about 4% down, give or take. And if you look at it, the last 1 year, the last 12 months, right? They are 5% in the negative, right? And year to date, they are about 3% in the negative. I mean, the year where say if you looked at Nasdaq for the last year, let's just go take a quick look at Nasdaq. The last 1 year, it shows 15.45%, right, in the positive. So on a year such as that, Amazon's done very poorly, right, for lack of a better word. Um, and if you take the last 5 years, they're still only about 33% up. And if you compare that with something like Google or Alphabet, the last 5 years, they're over 200% up. So that gives you an idea. But there are companies. It's not just Amazon, even Meta, for instance, right? If you take the last 1 year, uh, what they are like around 4%, 3.5% down. And let's take Microsoft, 3% down as well. And let's take Tesla. They might be up, but not by a lot, I think. Yeah, about 5% up, right? So they've all done a whole lot poorer compared to the index per se. Keep that in mind, and then we look at Amazon as to what's happening here. So on one side, when they reported earnings about 3 months ago, if you see here, I think they went up. This is around this time. No, not this time. Sorry. Yeah, I want to say it was at the end of October, if I'm not wrong. So they were at $222, and they went up to 244, and then they kept going to up to $254, right? So they had a $30 or a 15% swing at the time. They reported good numbers and whatnot. The market is expecting them to report good numbers even today, right? I mean, they expected to beat the top and bottom line, and perhaps even beat the guidance based on what Wall Street's expecting. At least that's what I can tell from what I'm reading and the vibe I'm getting here. But is that enough? I mean, we don't know, right? Companies report great numbers and then they are punished, and sometimes they report rather poor numbers and they're rewarded for those, right? How the market's going to react is anyone's guess, right? Your guess is as good as mine, and is as good as anybody else's. But let's look at what are some of the factors that might actually play a role here. A few things that actually come to mind. I mean, so the first thing is cloud, right? AWS. Now, AWS is where they make most of their, not most of their revenue, from what I understand, but most of their earnings, correct? The difference, for those who are not familiar, I'm sure you are, but I'm just going to state the obvious here. They make a lot more money from their e-commerce segment. But again, when you're buying products from Amazon.com, but the thing is, their margin on those products, it's grocery and other kinds of household products and whatnot, right? It is not really very high. AWS, on the other hand, that's not where they make the chunk of the money. They make a lot of money there, surely, but that's not where they make all of their. I mean, relatively they make lesser money there, but their margins are higher, right? It's software, so the margins tend to be higher. So let's look at Amazon's net revenue for 2025 last year. Net in, it says the net revenue for 2025 is about $700 billion, right? $700 billion. If you take the net income, not for Q1, I want it for the whole year. Yeah, I guess I don't know why it doesn't show the whole year, but each quarter is about $20 billion, give or take. So it's $80 billion annual revenue. I guess annual income 2025, maybe 80 to $100 billion, give or take. Um, yeah, annual revenue is expected to surpass. Yeah, net income is $76 billion, right? So you can tell that it's about 10% of the revenue, right? Just under 10% in totality. But if you take the AWS margins, it's going to be a whole lot higher. Amazon AWS profit margin. Um, it says operating margins have hovered around 34 to 35%, right? Let's keep that in mind. Amazon e-commerce profit margin. Yeah, it says the net profit margin for third party Amazon sellers ranges between 15 and 25%, though a significant portion operate within. Hang on. No, that's for the sellers. But for Amazon, the retail e-commerce business operates on much thinner, sometimes even negative margins. Wow. This is for sellers. So for sellers, it's 15% profit margin for Amazon, not for sellers. For sellers, it says 15 to 20%. They don't break it down, looks like, right? But it's clearly what we can tell from here is it's probably a rather smallish number, and it's not going to be anywhere near the 35% for sure, right? So let's go back to Amazon here. So just to recap that, they make a lot. They make about $700 billion in actual revenue. Under 10% of that is their income, essentially. Now, from that, a significant portion of that income actually comes from AWS, even though a significant percentage of their revenue comes from e-commerce and other businesses, primarily e-commerce. Their actual profits, the earnings is, as you can tell, is coming mostly from AWS. So AWS is extremely important. I think Microsoft tanked last week because they reported that they came 1% under earnings, if I remember correctly, and they were penalized quite a bit, right? They dropped over 10% the day after earnings. Amazon's market share is, they're still the market leader, as we know, in the cloud, but that market share has diminished over the years. I don't want to go back and look at actual numbers, so I want to throw some numbers that come to my mind. Take these with a grain of salt. In the interest of expediency, I want to just assume some numbers based on my recollection. I think they were about 50% or so, about 6 to 8 years ago. The market share, the cloud market share, closely followed, not closely, but followed behind by Azure and Google Cloud. The other two hyperscalers have caught up quite a bit, actually, to the point that I think Amazon's market share now is probably under 40%, give or take, maybe 38% or something along those lines. So the other two hyperscalers seem to be growing while Amazon's been losing market share on AWS. Now, I think they're expecting about 22 or 25% growth around there, compared to last year when they report a couple of hours from now for the same quarter last year. So if they meet that or beat that, they're okay. But if that doesn't happen, then there is trouble brewing. Now, let's talk about a few other things. Anthropic is something, it's in the news. It's been in the news quite a bit. Even a couple of days back, a lot of the other consulting companies especially in India and other countries, have taken a big hit because of things that you can do with the new models and the products that they continue to release. But Anthropic is something that Amazon has an investment, a significant investment on. But I believe other hyperscalers and other companies also have investments on Anthropic. So I don't know if there's maybe it's a theoretical number, if anything. So I don't know what, if any, role that happens to play, because they're probably doing quite well. As to what revenue that's generating and what their valuation is right now, I'm sure it's increased, and what impact that has on the actual raw numbers that are to be reported, I'm not sure. Probably not a whole lot. So despite these two hyperscalers catching up, and doing rather well in that space of cloud computing. AWS is still the leader, right, and by a fair distance as well. But they are losing that lead slowly but surely, and the lead has been diminishing, which probably explains why in the last many years Amazon has not been rewarded from the stock price standpoint, because maybe the investors are thinking, hey, you know what, show us something more, show us that your growth has not stagnated, or you're improving. So that's something to keep in mind. AWS is the number one in that list. And let's also talk about their the chip, right? So Amazon, like unlike Alphabet that actually does a lot of business with Broadcom when it comes to the ASIC chips that are different from the GPUs from Nvidia and also from AMD. Uh, I don't think Amazon does a lot of business. Maybe some with Broadcom, for instance, but perhaps not a lot. They have been working on their own, chips, like I think it's called Trinium, and they probably have invested a fair bit of money there to increase their margins, right? To increase their margins, so they're not giving other companies a lot of money, so their AWS margins increase. Right? One is you try to increase the business in as a whole, so you're selling more AWS products and services and make more money. But even in the dollar, in the money that you're already making, if you can have a margin expansion there, right? So we can make more profits out of the dollar that you're making in those products and services when you sell them, then you're going to be in better shape, right? Margin compression is not something Wall Street seems to react to very nicely. So if they can say that they've made some improvements and advancements in that space, and their need on other chips from Nvidia particularly, or AMD, that I'm sure they're buying from, has reduced, then maybe the market's going to reward them, right? Hey, your margins are looking like they're going to improve, or they've begun to improve already. So that's something to keep in mind. That's category number one, AWS. Number two is retail, as we know, Amazon.com. What's happening with Prime and Prime shipments and memberships and everything in that space. Prime memberships, maybe they've increased, hopefully, and how much have they increased by? And probably they might keep increasing the Prime subscription cost per year, so that makes a difference as well, right, to their net revenue and income. But again, the economy, I mean, the market's doing has been doing quite well, but for some of these days, like the last 2 or 3 days. But again, they call it the K-shaped economy, where the rich are doing quite well, but the people who are just working class folks are probably not doing all that well. So we don't know. Maybe there's a lot of maybe the holiday season, the Christmas season, they sold plenty, and they probably surely did, probably or surely did. I'm not sure. So those numbers could actually be better than expected, better than the market expects. But the problem there is the margins are not a whole lot there, right? So sure, they need to meet those numbers and maybe even beat those numbers. But given that the margins are not very high, it's not going to do much to their earnings per se, but it's an important piece of the puzzle regardless, right? But because that's where a chunk of the revenue is coming from. Last but not least, advertising. That's another space where they're making a fair bit of their money. Now, how much money do they make? How much of Amazon's revenue comes from advertising? From about 10% of the company's total revenue, right? How much of Amazon's revenue comes from AWS? That's only 15 to 18% of total revenue. So you can tell that, right? 18% from AWS and about 9 to 10% from, say, ads. That's about just under 30%, which means 30%. The other 70% comes from e-commerce, right? Literally. Their margins are small, but that's where they get most of the money revenue from. With AWS, with just 18%, they have a lot of margin there. So that's what contributes to their earnings, like we mentioned earlier. Now with ads, what is Amazon's margin on ad revenue? High margins and retail units that we can tell. It says operating margins potentially exceeding 50%, which means it was 35% for the actual, for AWS, which is high, and 50% even higher for ads, right? So the more revenue that they make on ads, the more it's gonna help towards the bottom line, right? Their earnings. So that's pretty good. So if they show an increase in ad revenue, in many different forms and shapes, then that's going to help the cause as well. So these are three broad buckets, right? AWS, retail, e-commerce, etc., right? Retail slash e-commerce, and then advertising. That's probably where the focus is going to be on. And then what their guidance is going to be. Last but not least, sorry, capex, right? Alphabet mentioned that they're going to spend about 160 billion dollars on their expense. The capex is going to increase to about 160 billion dollars just for 2000 in 2026. I mean, that's a huge number, right? Probably a little bit higher than what Meta reported, I think, or maybe around there. Those are massive amounts of money that they're spending, and probably a lot of the money is going to go towards AI. They mentioned that, which means Broadcom is going to be in the gaining from it. And not that it relates directly to this conversation, but let's look at where Broadcom's at. It's gone up 2.5% on a day when Nasdaq's been plunging. It has to be because Alphabet is going to probably spend a lot more money on those ASIC chips from Broadcom. There are other companies like Marvel that make ASIC chips as well, but they hold a very small market share. We could do a different podcast focusing exclusively, almost exclusively on Broadcom. Let's get back to Amazon here. So it does make a difference. The capex, how much they're going to spend. Maybe they're going to say maybe the capex is going to be $200 billion. I don't know. And if the number is too much, and if they're not showing enough ROI on that investment, then the market may or may not react to it very well, right? It's just going to react differently. Now the thing is, that the Amazon has already taken a beating, like we've seen here, right? They're down over 5% in the last 12 months, and then in the recent high was $254, yeah, on November 3rd, which was about 3 months ago, right? A quarter ago. So that's about, what is it, like $30 down, 25, 10%, and then 12% down from that number essentially. So two ways to look at this. One is, they have been beaten down. So even if their numbers are all right, I mean, they've got to have good numbers, I think. But even if their numbers are just decent enough, they beat those top and bottom lines and have good guidance, maybe the market might reward them. Who knows, right? Regardless of the capex spend. But if there is something that seems off there, right? Maybe their AWS growth has stagnated, or they show lower numbers in when it comes to AWS. Then there could be trouble brewing, and if trouble starts brewing in an already shaky market here, uh, then I don't know how what Friday has in store when the market opens. But nobody knows, right? We don't know. I just want to share my 2 cents here. Take it with a grain of salt, more than a grain of salt. It's just thoughts that came to my mind. If you have any comments, opinions, what you agree with, what you disagree, certainly do let us know. Hopefully you learned a thing or two that you may or may not have already known about Amazon. Definitely go check out our other podcasts as well in the space. Talk soon. Bye bye.